You're watching the Mortgage Busters show. Now, you've seen this show before, I'm sure. And this show is all about paying off your mortgage as quickly as possible. But also, the other half of this equation is that you have to pay off the mortgage, but also prepare for retirement. Adrian.
Howdy.
How are you?
Goody, goody.
Now, educate me. How much do you need at retirement?
They're saying at least 1.5 million now.
It used to be one. It used to be 1 million.
Not long ago.
But why? Why is it 1.5 million? Why is it the magic number?
Inflation, everything's going up. It costs much more to live.
So
hell of a lot more to live.
If you've got 1.5 mil, you've got your house.
But you got to die within 10 years.
But you'll be happy.
That's right. At least you can afford it.
That's it. So you got 1.5 mil. And what does that mean? What does it cost you to live by year? 5% return.
Yep.
So okay, you need 70. What?
Sounds like a banking.
You need $75,000 per year to live. Now I can tell you the man that can answer this question.
Yes.
Right,
yes.
and that is
Dale
Sinnott from Accelerate Capital.
Thanks for having me back, Greg.
Welcome back.
Welcome.
Now we've had a fantastic response from the last show.
Thank you.
And we want to get you back and back and back and back.
And he doesn't.
Unfortunately, I've got too much work with all your clients, Greg.
So the question we have to ask this week is small business doing it hard?
Yes. Considering that small business takes up the majority of our economy, the benefits that they're getting at the moment from the financial institutions and from the government is making life very difficult for small business. But the thing is, to go back from your intro, is that for the majority of our small business owners, the value of the business is their nest egg for retirement. And that's the important thing, is that what we've got to do is we've got to support our small businesses about how they can maximise the value of their business so that they can meet their retirement goals.
Yeah, because we've actually met heaps of them and none of them got super.
Yeah, correct.
They've got just the business.
And, what you were saying just then, I was thinking, is the value in the assets or is the skill set in the business owner? Because that disappears with the owner, doesn't it, once they sell or when they,
Correct. There's no doubt that in certain businesses, especially things like professional advisory types of businesses, consultants and things like that, yes, the skill set is with the owner, and once that owner goes, then the value of the business isn't there. So for those types of people, what you would tend to think that their business is going to be stronger in the income generation and that they're going to be making their money on a year-by-year basis rather than creating goodwill that's going to be an asset for the sale once they're looking at selling the business.
Yeah, right.
But they should be doing what everybody else should be doing something for their retirement. They should be looking at positive or negative gearing.
So while they're making the good money, they should be making sure that they're doing the right things about making sure they're maximising their contributions in the super, looking at using the tax benefits of negative gearing into property and those sorts of things, making sure they've got their structures right, that they're using the tax thresholds to their benefit.
They can do it.
Correct.
A lot of them are actually scared that they can't do it, and probably it's better to speak to a broker instead of going straight to the bank, because they could be a bit they are. People get scared to go straight into the bank. It's always you hear that.
Exactly, Adrian. It's a bit like going to the supermarket these days. Is that you're better off. There's so much choice out there, and that somebody goes into the bank, is that they're getting shopped around. They need to have a broker who can cut through and tell them what's the best product for their situation, not only now, but in the growth of the business into 5 years, 10 years or 20 years down the track.
And negotiate on their behalf for their best interest.
Absolutely.
Instead of the bank's interest only, best interest.
And it's also about making sure they're getting the right products for their business. We've spoken quite a lot on this program about cash flow. So it's about making sure that if your business needs cash flow, is that we're getting facilities that can help you get that cash flow in so that your business can grow.
And I was just thinking that there's good brokers and there's not so good brokers. Is there too many brokers in Australia? Is there?
Look, I don't think there probably is too many brokers, but there's a lot more legislative requirements now for brokers, so they've got a lot more requirements, what they need to do, the advice they're allowed to give, and things like that. So the industry's probably tightened up a lot to what it used to be.
Yeah, of course.
But at the end of the day, with the brokers, it's about finding somebody who can represent all your interests. So quite a lot of our quite a lot of brokers maybe just residential, so they're good for your home loans, where other brokers may be better for businesses, and that they understand things like trade finance, debtor funding, those sorts of things, which are more complicated and need to have a stronger understanding of the business concepts.
Like equipment finance, they don't have to pay cash for all their equipment. You know, a lot of people can just borrow it.
Correct.
Instead of forking out all their cash.
Yeah, and just, working out the better, ways of financing your loans within that business, to making sure, should you have a principal and interest loan over a 15-year to get that business loan down, or do you do it through some other mechanism? So it's about just making sure you've got the right product for that business that's not going to help you grow the business in the long term.
Do a lot of startup, small businesses fail? They, like the average startup business, like somebody that wants to bake cakes. They love cake baking. I don't know why I chose that, but
Absolutely. There's you probably put me on the.
Is it 2 years or something? I heard that they don't last more than 2 years.
Yeah, there's a huge majority of businesses.
But just from your experience,
from my experience. We're probably very lucky that a lot of our clients' businesses are quite successful.
That's the good accounting advice. That's what it is.
We're all about planning, about sitting down and making sure with our clients that they've done a cash flow and a budget to project what they need to do into the future, that they've got the right financing facility to match the cash flow that they need for that business into the future as well. So, to me, if you want to be successful in the business, you've got to do a business plan, you've got to do a budget, you've got to do a cash flow, and these are just basic documents before you even open up the front door, because they will tell you whether you're going to make money or not, and they will tell you what you need to make on a day-by-day basis to break even.
Just say that with such confidence.
That's excellent. That's really Nobody's actually ever business plan.
We need to go to a break. You're watching the Mortgage Busters show. We'll be back very shortly. You're watching the Mortgage Busters show, and we're with Dale Sinnott. Dale, the small business owner. We were talking about, the average business owner who's baking cakes, and they've got the interest to bake cakes, but have they got the skill set to do the books and to manage the cash flow and deal with all those issues?
Yeah, certainly that they need to have that skill set these days. Is that the old days of just being good at your business isn't so good these days. Our economy is changing, and the way that we do business is changing. So these days, what we've got to look at is just say somebody extends credit out to clients. We've got to make sure that those people are following up their debtors to collect them in, because we don't want to be all of our customers' bank.
150 days.
Yeah, right. Of course.
So we want them to pay on time.
Yeah.
And also maybe what we were talking about in the first segment about going back to the bank and doing debtor financing as well, to allow that cash flow to come through.
So just for the viewers, just explain that, just in a bit more
invoice,
depth.
Basically what debtor financing is the methodology of financing against your invoices that you've sent out to your customers. So basically, you send out an invoice for $100, and the finance company will give you $80 straight away, and then they'll collect that money. They collect the $100, take out their interest and fees, and give you the balance back. But basically,
so it smooths over the cash flow.
Correct. Yeah. It means that you're now not waiting 30, 60 or 90 days for your money. You're getting your money back in 7 days from the bank.
And particularly on the small business owner with mortgages, the business, there's an asset, a building, or plant and equipment, whatever the case. How are they managing the debt associated with that?
Yes, they are. Probably the major one that they've really got to look at, though, Greg, in these days is the tax debt. every businessman these days is a tax collector with GST. Yeah. So what we've got to do is make sure...
I never voted for
Me either. I got words for that.
But basically, we've got to make sure that they're putting sufficient funds aside so they can meet their quarterly taxation debt with the ATO, because the ATO can be aggressive sometimes in relation to tax collection, and they will bankrupt businesses if they don't pay their tax debt. So it's quite important that they
don't hide.
Yeah, they
definitely don't hide.
So be
they don't
open
hide.
and frank. Have open and frank discussions.
Yeah, absolutely, absolutely. But look, even if you get behind with the tax office, it's about being open and coming to a payment arrangement. The ATO are a commercial beast these days, and
word,
but I reckon they're okay.
Hang on, shut up.
I have to say that. I mean, whenever I've had to, inquiry or an issue.
That's because you're actually being proactive. You're not hiding, because if you hide, that's when it gets into...
It's all about communication, Adrian.
Yeah.
And, we find that if you've got good communication with the ATO and you're able to provide the documentation that they require, so they're like any banking institution, is they like to see cash flow, they like to see a budget, they like to see your statement of assets and liabilities to make sure that you have the ability to repay their tax debt. And if you can provide them that information, generally they have an open ear in relation to a good payment outcome.
I mean, even the larger picture in terms of paying back debt with the bank, whether it's a personal loan or whether it's car finance or whatever the case, it's better to be open and frank and honest and deal with it.
Look, nobody wins by putting your business into administration or putting you into bankruptcy. Nobody wins that game at all. So basically, if we can come to an arrangement for you to pay that debt out over a longer term, then it's a win-win situation. It's a win-win for your business, and it's a win for the tax office or for the bank, because they've still got their funds through. But it's all about having good communication and good plans and business plans going through to show that you can meet those payment arrangements.
What do you actually do to help these businesses? Because we obviously run our business and we know how we've got to do everything. Do you actually refer them over to like bookkeepers, or because obviously a lot of them try to do their own bookkeeping?
Absolutely.
And it never happens, as you know.
Absolutely. Again, it gets back to the client. Some like to be heavily involved in it and do their own bookkeeping, and so it's about getting them into programs like Xero and MyOb and those ones, especially the cloud-based accounting systems, because we can log into it and see where they're making their mistakes, if they are making mistakes, on a live basis. So that's really good that way. But if they don't want to be heavily involved in the administration side of it, then yes, we can refer them to bookkeepers, or alternatively we can bring it in-house into our accounting practice.
So what was it, Xero, and what else was it?
MyOb,
everyone knows them. Yep.
Mine,
so Xero's a little bit better, or
it's a cloud-based accounting software that started about 4 or 5 years ago, but it's probably become the most predominant cloud-based software on the market at the moment.
So look, I know most people know what that is, or at least heard of it. What does that actually mean?
Cloud-based?
Yeah,
it just means that the software is not loaded on your computer.
Right.
So basically, you log into Xero's database, and your data is going up into there. And then I can also get a password or an invite from the client, and I can log into their database as well. So it's a great live way of doing it, because we're looking at each other, we're looking at the same data at the same time. Yeah, exactly, real time.
Fantastic.
Instead of you having to get it off him, he'd have to give it to you.
It means I can adjust people's general ledgers straight away. If I can see a mistake, I can correct that mistake straight away. It's not telephone, it's not USB sticks or anything like that. It's there and there.
As it was before.
Correct.
And time is money.
Exactly.
Really.
And
Absolutely.
I like money.
Well, we all love money. All right, we're getting pretty close to a break, so we might as well take a break right now and see you on the other side.
No problem. Thanks, Greg.
You're watching the Mortgage Busters show, and we'll see you very shortly. You're watching one of the most informative shows in Australia, called the Mortgage Busters Show. And we're with Dale Sinot from Accelerate Capital.
Thanks, Greg.
Did you like that intro?
Love the intros.
Dale, we chatted about superannuation before. So how about superannuation to use to purchase property? A lot of people just have no idea in business.
In business, what we really like to see our business owners do is look at using self-managed superannuation funds to buy their business premises, whether it be office space, warehouse space or factory space. We just think it's an ideal vehicle for them to propel their wealth generation plans by having their own premises. Let's pay off your own mortgage rather than a landlord's mortgage.
It makes sense. Total sense.
It certainly does.
Yeah.
And these days you can use that non-recourse borrowing facility to...
Can you just please explain that again?
Right, a non-recourse borrowing facility is basically the bank, when they lend the money to the super fund, can only claim the asset, which is the land, should the loan fall through. So basically...
As against any other assets?
Correct, within
personally
the
owned
fund.
by... Yeah.
Correct. So their only recourse is against that piece of property, not against the $1 million share portfolio or...
I like that recourse loan.
Or anything else that may be sitting in the super fund. So
Yeah.
it's the product is a little bit expensive because of that, but it's still a great methodology of being able to give you that flexibility by owning your own premises, being able to create or generate wealth by the rent is now going in against your loan, against somebody rather than somebody else's loan, and of course you're getting the benefit of capital growth in the property asset as well.
Of course, of course. It's actually a fantastic approach, isn't it? Really,
It is. It is. There's nothing better than being your own landlord. So
Yeah, I really is that popular? Do people
I don't think
take
a lot
up
of
on
people
that?
know about
I don't
it.
think most people know it. Yeah.
yeah, look.
Do you encourage this?
We absolutely.
Yeah.
We always see that as being our long-term goal. So when we're sitting down with our clients, when they come into our office, and we're talking about 5 or 10 year plans, the number one point that we're always talking about is that we'd like to see them be able to buy their own premises in that 5 to 10 year plan period. So we see it as being an ultimate the ultimate for our clients to achieve.
See, just peering it right back, just for the average onlooker, right? Someone who's got a job, they've got a their industry super fund, right? We're not talking about that. We're talking about progressing to a self-managed super fund.
Correct.
And then progressing to that next step as well.
Correct.
Yeah.
As a business, yeah.
That's because they're two pretty big steps.
Yeah. And also, the other side of it is what we're selling our clients is that if you can maximise your contribution into your superannuation fund in the earlier stages of your business, you're building up that nest egg to be able to buy your premises in 5 years' time or in 10 years' time. If you've got mum and dad and they're contributing $30,000 into their superannuation fund every year, then after 5 years they've got $300,000 there as a deposit for their premises, and they've got the benefit of the tax deduction along the way.
And it's really all about education, because some people, when they hear about self-managed super funds and they don't understand it, and there's some trepidation about that, how do you encourage this, or do people, once they inquire about it, say to you, it's just full and frank discussion?
It's a full and frank discussion, because at the end of the day is that you're dealing with people's wealth creation plans.
Yeah.
So they've got to have control over what they're doing and be comfortable with what they're doing.
And it's not rocket science.
It's not rocket science. It's not. You can make it as complicated as you want to, but at the end of the day, a superannuation can be as simple as in having a property and having some rent, a few shares, and cash in the bank. And you don't need to trade those shares. You can just sit and forget about them. So, and same with the property. As long as the rent's coming in every month, that's the main thing. Set and forget.
Set and forget. I like that.
Do you find a lot of businesses are neglecting insurances? They get the ones that they need.
Good question.
Right? The ones if you fall over and kill yourself.
Yeah,
but they don't get if they die or, they're left jobless or...
Yeah, we always sort of try and sit down with our clients and go through what their insurance coverage should be, and looking at the various areas. So it's not only just looking at should they be insuring for business loss, should they be insuring for business expenses, so if something happens to their business, their monthly recurring expenses have to be paid, so that you can get insurance that can cover those expenses should you not be able to trade. Then you've got your normal income protection type policies, but then there's things like key man insurance policy. So if somebody wants to exit the business, how can you fund that?
This is interesting.
We
Could you say that again? Paul?
Buy out.
Key man
Buyout,
insurance.
your partner.
Buyout insurance, exactly. Key man, I think, is
I've never heard of the word key, but buyout insurance, I heard of.
Yeah, right.
Buyout insurance. It's basically, two gentlemen are in business together. One gentleman decides that he wants to retire. How do you fund that retirement? How do you fund to buy that person out of the business? And where it is really relevant is where somebody passes away unexpectedly, because all of a sudden you're dealing with an estate, you're dealing with grieving people, and the last thing they need to do is be making critical business decisions about the future of the business. So if you can have an ability to pay the estate out straight away, get that nest egg over to the spouse or the partner's deceased, then that's the best way to do it for long-term benefit of the business. So, so these buyout insurances are a great thing when they're attached to a life insurance policy as well. So there's various types of insurances, and you've got to look at specific types of insurances for the businesses as well. And of course, we want to make sure that our clients have their work covered for occupational health and safety issues.
Yeah. What is it? OH and what
Yes.
OH and S.
I won't say it. My version.
So, the conclusion I'm drawing to here is really knowledge is power, isn't it?
It is. It's not only that, but planning. Planning is the crucial part.
Yes.
It doesn't matter when you're going to start a business, you need to get in there and plan from the very start. And the greatest part about having a plan is that it gives you something to measure yourself against. It gives you a reason to get out of bed and saying, okay, I've got to make $100 worth of sales today to make my business plan. And that's the greatest thing, is being able to measure it along the way. And the thing is that you know that if you achieve what you're put out in your business plan and your cash flows, then you're making money. And if you're making money, then you're maximising the value of your business, and that's going to assist you to achieve your retirement plan. And if you're doing it well, you might even be able to retire earlier.
Wow, hop in the middle chair, will you?
Well, all I can say is them's profound words.
You need to rewind
words,
that, folks. Rewind.
Very profound. That's all. I have to say that was very succinct and to the point. Very good. Very good. Well, we've come to the fantastic parting words. I have to say, that was really good. And we've come to the end of the show. Just quickly, Adrian, what do people need to do to contact us and make sure that...
Yes, get in touch with the TMB show, the Mortgage Busters show.
The Mortgage Busters
behind
show,
us over here. You can Google us, and you can also have a look at us on our YouTube channel, or call us on 1300 TMB show, or you can get in touch with the numbers down the bottom and our websites, which scroll down the bottom as
which
well.
is
www.tmb show or the Mortgage Busters show.
Yeah, that's it. Fantastic. So,
and get your free report.
The free report is most important, and it's available to everyone that's watching
including
the show or that
businesses.
just requests it. So it's a fantastic facility, and we've got lots of demand and lots of inquiry. Fantastic.
Yes,
so you've been watching the Mortgage Busters show, and we'll see you again next week.